What is going on, guys? I'm going to be doing our first video for the educational channels. I'm very excited to be getting this video out for you guys, and I'm very excited to be talking about it because it will help all the beginners in the group understand exactly how we trade the ranges that we do. It will help you understand all of the charts I post every single day, and you will slowly get the hang of it. This is one of the best things that I can teach you guys, even if you're an intermediate trader. I know there's a lot of you guys in the group as well. You will be able to learn something from this video, and you will be able to definitely take away a very nice skill in trading. It does seem simple at the start, and some may say that it even is, but it is a very profitable method and strategy to use for the markets, and it is relatively simple once you start understanding it. I don't believe that it's simple from the start, and I do believe that that mistakes can be made in these levels as well, and you have to really understand exactly why you look for these areas and what they mean and how significant they are, unless or else you will actually end up making a lot of mistakes using this as well. So I will teach you guys this. It is a very nice strategy that I hold close to my heart, and I actually used to scalp off these on the lower time frames when I didn't have the group. I basically use these areas as very key areas. So we're going to be looking at all of this in today's video. I'm going to try to keep it as short as possible, but I also want to go slow. I want to be clear and concise for the beginners in the group, and I want you guys to definitely pay attention. Maybe you will have to watch this once or twice, or maybe even 3 times, but over time, once you watch it, once you see examples play out in the group every single day on the chart channels, you will be able to start trading yourself, and it will be a nice strategy of many that I will be teaching you guys. And it is very important. I want to put this in the light, and I want to tell you guys it is very important you watch this video and you understand this video, and so you're not confused every time I post charts. Remember, the point of the group is to teach you guys exactly how to trade, not give you guys calls, because call groups for the most part do not work. People take profits earlier, people manage risk differently, so it's all different, and it's very important that you manage your risk properly, and it's very simple way of looking at how to manage your risk in today's video. And as you can see, basically, if I give you guys a little rundown before we do start, let's go into full screen. All we're going to be looking at is supports and resistances. Now obviously support and resistances can be many different ways, guys, and obviously one of the ways that we do use it is our horizontal resistances, which you see here. But you can also have moving averages, which we'll look at later on. You can have trend lines like this that are supports and resistances as well. So these areas and these key things will give you some very nice trades. For example, let's say you were buying this trend line right here. You would have bought down here, or when it started being created, you can see that people are buying this trend line. Basically came down here, people are buying this trend line, keep buying this trend line, and buying this trend line and going to the upside. You can see it very simply right here. It's resistance. You sell this resistance, buy this trend line. We will get into this obviously later on in the video here, but it's just a simple way to look at it right here. Also, the fact that, for example, you have I will actually show you guys that later, but that's basically what it is. It's your trend lines, it's your horizontals, it's your moving averages, and if your moving averages line up with your horizontals, it's even better. It's even more consolidated as a support and resistance. We'll look at that later on in the video. I'll be showing you guys an indicator, a pivots indicator, that will seriously change your life, guys, with this, and it will make understanding this a lot easier. You will be able to use it on an everyday basis. And it's something that I didn't have when I first started trading, and I wish I did, because it helped me understand. It would have helped me understand these a lot better and a lot quicker, and I will be showing you that towards the end of the video as well. Then I want you guys to know one of the key things about this is that it is basically market psychology. It has a lot to do with market psychology, and these key areas are actually psychological levels. Okay, so for example, 10,000, 8,000, all these levels are psychological levels for Bitcoin. Right here is a psychological level for Bitcoin. For Chainlink, you can see how many times we've been rejected off it. This area, we got rejected off it many times. We tested it once, we tested it twice, we tested it many times, and we consolidated in this region. For example, the $4 level would be a psychological level getting close to those highs, and there's a lot of examples that we can use, but these areas are used by traders and stuff to basically for example, tell the future. So this trader sees this area as a horizontal resistance that is seen many times right here. He's seen many times right here, for example. And so what does he try to do? He tries to short this area because it's a psychological level, to take it to the downside, because it's basically based on past history. So it makes it a psychological level that people, traders, bots, algos try to react to and basically anticipate the future with these levels. That's basically what it means, guys. And your resistance is obviously when you're in an uptrend and you make a temporary stop, and it's where you could possibly make a temporary stop. It doesn't mean that it has to be the complete top, obviously, but it is areas that you can either scalp or swing trade off. Your supports are basically the opposite thing. They could be areas of a bounce, basically, and these areas can be very critical as well, just like this area. This was a very psychological area. It is where we had our big breakout point, where Chainlink went absolutely parabolic to the upside from about let's say $1.47. You can see how much of a big breakout this region was, and so this became support. What was once resistance became support. So it did an SR flip. When I say S/R flip in the group, it means a support resistance flip. So that's exactly what you saw here. You saw us break to the upside, come down aggressively, test this region, and take another huge leg to the upside at around $4. People who didn't take profits here stayed in here, and obviously always take your profits. It's pretty bad that people don't, but that's for another video. But as you can see, it came all the way back down, because this is how markets work. And even though it was still an uptrend, came back down, gave you another absolutely fantastic buying opportunity. So this became another psychological level. And where can you actually see it? So this became weekly support, guys, and your indicator will try to tell you this as well. If we go on the high time frames, I can explain this as well, but we won't make this video too long. But as you can see, psychological level, because this was our last big breakup point. It was a great reaction to see us actually come down and get support on this area. So it became a very important level. Then we came down once again and we made this a very important level. And then what happened again? On this huge dump to the downside, we came down and tested this level again. So could you have bet that if you were looking at the high time frames, you would have been able to get a very nice trade off this area? Well, of course you could have, because you've seen it bounce 1, 2, 3, 4, and you can count these as many bounces. You've seen great reactions off it every single time. So you could have said that this was going to be a good buying opportunity for me. This is going to be a good little 5 times trade, let's say. And how easy would it be to actually manage stop loss on this trade? Well, it would be very easy, because you would put it right under your support. Now you can make it very close to your support, or you can make it a little bit further away, give yourself a 5%, for example. So that's when you look at your risk to reward. You look at your Fibonacci's, you look at your even supports and resistances, even these horizontal supports and resistances. You can just put your stop loss below there. But sometimes, to not be wicked out, traders will give themselves a little bit of space between those regions. So I hope that was a little bit of a simple explanation, and this actually shows it perfectly. I wasn't going to show you guys this, but it does show it pretty perfectly on Chainlink right here at how important this level is. Remember that these areas are psychological areas. You can look back past on the price action, not get worried that we're coming down huge right here, but rather know that this is a great area, an important area. Go on your pivots indicator that I will be showing you guys and identify these ranges, and I'll show you guys exactly how to do that towards the end of the video. But we're in about 9 minutes so far, so it is actually kind of going to plan right here. But let's say this is going to be a pretty bad look, but I'm just going to draw one quickly to also explain to you. Once you start concentrating on, let's say, your horizontal supports and resistances, if you are new, concentrate on one thing, guys. Trust me. Do not get 10 indicators on your screen. Do not get a bunch of indicators, a bunch of I don't know, like price action signal indicators that people get. Do not get any of those. Have one indicator on your chart, learn that indicator well, and then start using other things. So for example, right now, just do your horizontal supports and resistances and identify those, and slowly start going into patterns. Start backtesting the price action and seeing patterns. So for example, right here, let's say I saw a falling wedge. Now a falling wedge has a 60 to 70% chance of a break to the upside. It usually breaks to to the upside. That's exactly what you see here. But you see the price action get rejected at a critical resistance. So we actually had this as support. We came back, we bounced off it once, and we almost had like a V-shaped kind of recovery on the lower time frames, as you can see. And then what happened? We trickled back down from this. We made this resistance as well. So we did an SR flip right here, took it to the upside, SR flip, because this was support, which turned resistance. Up here, it was support, which turned resistance now, took it to the downside once again. And then we finally broke this support, right? And so we did another SR flip. The support became resistance, right? And we retested it, and that shows us that it became resistance because we retested it. Came back down, had this trading range here, and then anyway, over time we trickled down to the support that we were talking about that is very important. Then we trickled back up, and over this we actually got a falling wedge pattern before this. After this huge pump that we had, although we got rejected at this resistance that I showed you guys over here as well, we made a falling wedge pattern. Now this falling wedge pattern will go to the downside a little bit, but then what do you actually see? You can look past on your price action and you'll be able to say, okay, so we've made a falling wedge. The falling wedge is getting tighter and tighter. Typically we fill, let's say 70 to 80% of the patterns. Now obviously a falling wedge pattern can actually go all the way down, so it won't really apply there, but you can see a big order block right here. You can see a big order block right here. A few wicks actually got caught right here, guys. As you can see right here, a few wicks got caught. Can you see that right here? A lot of wicks got caught and it actually bounced. So you can see a lot of confluence in this region. This was our break up point here. This was our support point here. So you can see a lot of price action in that region. So you can say that on the lower time frames, it is a nice support, right? It's a nice support. We're in a falling wedge. It's a nice support that we're about to get reaction off. You watch the reaction on the lower time frame. So you see we bounced off. This was a great reaction by the bulls. We actually bounced up pretty aggressively. You got a basically trend reversal candle right here. We'll get into candlesticks and candle patterns later on, but you see how beautifully this is a horrible falling wedge that I've drawn right here. But you guys get the point. Had a fake out, great reaction, fall back on support that I showed you guys, and you're in a falling wedge pattern, so you can use it with confluence with your indicators and also your patterns to say we are on a strong support, we are in a falling wedge pattern which breaks the upside, and we are, let's say, on moving averages, and that is even more confluence to your basically for you. That's more confluence for your trade. So over time you will get more confluence and you will see more things on the charts. So let's say you see a pattern and you use it with your horizontals. That's my point I'm trying to make. These horizontals can be used with, or this support and resistances can be used with many things. Now what should we actually talk about? We should talk about this region. So this region has been on our charts for a while, guys. We've been saying if we break the 2.07 region on a 4-hour basis, take it to the downside and short this area. And I know a lot of you guys did in the group. We said that this was our support on a daily support or weekly support. So people actually long this area. This was our resistance, came back, and I said put in a long position after we get a 4-hour close above this area. Exactly what you see here. We went up about 30% right here. So both good trades to the downside, good trades to the upside, and I said this all in the chart channels, and I know a lot of you guys actually caught that as well. You could give yourself a range like we had here, so you could buy this range. As you can see, it would have worked very well a few times, and put your stop loss below and take it to the upside. What do we wait for here? We waited for a 4-hour close above this area. On this candle, we got that 4-hour close above this area and we took it to the upside. That's how we had that really nice trade yesterday or the day before. So let's say you even bought it off this support, which you wouldn't have got the absolute bottom, but that's 20%. Why did I choose this top area? Because you see a lot of orders in this area, and I even talked about this in my analysis. I said that this area, there's a potential that we stop in this area, and I talked about it in my video. Why? Because there's a lot of things right here. That's exactly what you saw here. You saw us break the resistance and consolidate it at a high level and then take the next leg to the upside. That's why I was saying consolidating at a high level is very good. Right here, consolidating at a high level is pretty good. Take it to the upside. And it's a critical area. So that's basically what I'm trying to show. I don't want to make this video too long, but I hope you guys are understanding what I'm saying. So if we go on the lower time frames, I'll quickly finish off with Link right here. Then I'll show you some Bitcoin. But when I post charts, you guys can go ahead and chart them out and put these levels at the exact same areas that you're watching. So this is a 4-hour time frame. It would be more clear if we went on the lower time frames, but this was our range on the lower time frames, okay? So the 2.07 to, let's say, 1.9 was our range. You could have been buying this area and you would have been taken to the upside. If you bought it here, put your stop loss below, maybe you would have got wicked out. Maybe you would have put it out a little bit more. Depends on how much you were using. So use small amounts so you can risk more. 39% to the upside. When we came down here, we broke it to the downside. So even if you got stopped out here, you could have shorted it down because we got a 4-hour close below the support, all the way down for 26%. We came up here, you would have sold your resistance. So sell your resistance for 15%. We talked about this in the group. Then you came back here, you wouldn't have caught this absolute 17% move to the upside to the resistance, but that's okay. You would have played it safe, and then you would have got it on a 4-hour close above the resistance. You would have put in a long position for 32% gain. So you wouldn't have caught the absolute 16% down here, but you would have caught another 32% if you waited for this 4-hour close, which basically retested the support as well. And when you play the ranges, do not hold your trades. This is what I try to explain. Trade the range, take your profits quickly, long the tops, or long the bottoms and short the tops, guys. So the lower time frame resistance is this green box right here, coming down a little bit, trickling down. You can see we consolidated here for a while, and even if you go on the really low time frames, you would see this really small range being created right here before we actually broke to the upside. So you guys would be able to go on the lower time frames, and this is how I actually scalp sometimes. I've stopped scalping as much since I've had the group to be able to catch these longer term plays, because scalping is very hard to actually call in the group, because I might put in a trade here and quickly be out of it in the middle here because I want to be safe. And when you call a scalp, people would think that you're looking for these big moves, which usually for a scalp, I'm only looking for especially on Bitcoin, I'm only looking for a $40 to $50 move most of the time. I'm looking for a $100 move. I'm not looking for much, guys. You compound your profits that way. And so you can see these smaller ranges and you can identify them. I'll show you guys exactly how to do that over time in the group, and you can just see it in the price action how well it's respecting it. We broke to the upside here, created a lower time frame range. The top was about 2.37 and the bottom was about 2.23. These ranges over here worked perfectly. Down here was that daily support. Obviously these big areas are your daily resistances, daily supports, and then the median of the range. So this area would be the median off the range, guys. So I hope you understand that a little bit. I'm going to go on to Bitcoin here and actually use some great examples for you guys. So I will get rid of everything here. I will get rid of everything. We're going to have a chart by itself. Now, firstly, obviously, we have this trend line of support we've been talking about. This trend line of support finally broke, but we had 1, 2, 3, 4, and let's say 5 bounces off the bottom. And so this trend line has been stopping the lows since March 12th, which makes it a very strong support. Actually, the more times you hit a support, the weaker it's going to get. So it's not like so strong, because obviously the people that are buying this trend line are eventually going to be running out of money, and they're going to be not being able to put as many big positions in, or any positions in at all. So what you saw here is it come down here, and the people buying this trend line over and over again, the people buying this trend line over and over again actually end up running out of money. So we break it to the downside. Now this could trigger a way bigger move to the downside, because it is a rising channel. A rising channel typically breaks to the downside. If we get our, or it could be a rising wedge. So that's just up to you guys to decide. But this could actually take us all the way down to 5,600. Now, could this be that this is a fake out because it's a weekend? Well, that's very possible, but we're not doing a technical analysis on Bitcoin. The point is, this is a rising wedge and a rising channel. This is what typically happens. It's a 60 to 70% chance that it will break to the downside in a rising channel, in a rising wedge, in any market. And as you can see, we did break to the downside here. Can we retest it? We basically retested it here. So are we going to get another retest of 7,070 to 7,100 before more down? Well, that's very possible as well. Would you trade the breakout of this? Well, you could, but you would have to be very careful, because usually patterns do have failures. Now, we're not here to talk about patterns, but you see this support. You see how well the price action has been playing off it. Now, if we go on these lower time frames up here, what can you see? You see the price action. So ignore this entire price action, okay? So ignore from over here down, ignore it, okay? We're actually going to put a little black box here so you guys can't even see it. And I do want to talk about something important here. So we're going to concentrate on one part of the price action. I really want to get this clear for you guys, okay? So if we, okay, that's not going to work. So if we actually just look at this area, look at where my cursor is. You see the bottom of the range, you see this come up here. And what is this? What is that big candle? That's the break up point. You will see me refer to the break up point a lot. And then what do you see? You see a range being created. Obviously, the break up point is going to be your last resistance. This is when we saw this trigger to the upside. We came up and we stopped at a critical area. Now, why was this a critical area? We've been talking about it in the videos for a very long time. It was because at the top of the $7,400 to $7,600 range, there was a lot of moving averages acting as resistance, right? And I showed you guys this. We analyzed it every single day. So this area was a nice sell area. It became the top of our range where we were actually playing this really tight range where we were coming to the upside. Bots and algos and people were selling the top because of the moving averages, because of everything else, and coming to the bottom. Then the bots and algos were buying the bottom because of moving averages, because of support on the high time frames. And then we were selling it basically. So I hope you guys understand that and you can see how well this price action was playing here. Now, you could have been selling the top at 7,400 to 7,300. You would have your orders stacked here. You would have basically, let me get this to the, so let me do this and then let me do this. So you would have basically short orders stacked up here from 7,380 to 7,449. All the numbers are on the right here. You would short this area and you would long this area down the bottom. If we go down here, I'll put a green for you guys. So I hope that makes sense. I want to make it clear as possible for you guys. Long the bottom, short the top. Now you would put your stop loss here, give it a little bit of room to breathe basically, but don't do a loose stop loss, and then trade it down 5% down and nice moves up as well. But like you can see that this wick came down a little bit, so maybe if you gave your stop loss a little bit of space, you wouldn't have got hit. And maybe even if you looked at this area right here, this wick right here, you would have been able to pull this resistance or support down a little bit. Now even if you actually longed it again right here, even though we were even though the momentum indicators were showing a very big move possibly coming to the downside, such as a 4 hour, such as a 12 hour. And I should have been paying attention to this more. But even if you made the mistake of longing here, it's not a mistake, guys, because you're playing the range. You're simply playing the range. Now, if you're playing the range, you long the bottom and you put your stop loss below. So what if your stop loss gets hit for 1%? You're basically playing this range very safely, and you're making 5% from the bottom to the top, 5% from the bottom to the top, and that's without leverage. So what if you lose 1%, if you lose 2%? You've made 4 successful trades in a row, potentially making a lot more. So you guys get my point here. Now obviously I wouldn't trade very small range. I would, but I would be very careful trading these small ranges because they don't last for too long and they will have a break to either side. So you would have to manage your risk very closely. Now I want you guys to learn this, so I will show you guys a lot of examples. I know the video so far is 24 minutes, but this will be very useful. I hope you guys are understanding. It is one of the easiest things, but one of the hardest things at the same time to basically wrap your head around and start learning and start trading, because you will be able to be successful by just doing this. Now let's go to these lower time frames. I've been waiting to use these examples because Bitcoin has given us a lot of price action, and I wanted to make this video after. I actually made a 40-minute video just then, but I wanted to make it a little bit shorter, so I've done it again, and now we're up to 24 minutes as well. So right here you can see that we came down, we created a small range here. I do remember that the $4,050 range was actually our weekly support. We've been talking about it in the group. Anyway, you know that that's the big support, that if we do get down there, you will long that area at least on the first hit, because it's a big area. That's a weekly support. Your weekly support isn't going to break straight away. Take a sip of this water. So you come to the downside, you have a move to the upside. Then if you go on the really lower time frames, if I go on the 1 hour time frame, for example, and I reset my chart and I come all the way down to this area, this is the area I was actually, excuse me, I was actually scalping, guys. So if we go on these lower time frames and you get your horizontals right here, what will you see? You will see the top of the range on the lower time frames was like really here, right? So you would have been playing this area and it would be a very, very risky area, but you would still be playing it and you will be making very, very nice gains because the volatility at that time was high. So you were getting these crazy swings to the upside and to the downside. So you were getting literally 18% moves to the upside and the downside. And even if you were using 2 or 3 times leverage, very, very nice gains. So I was basically trading this smaller range. You can see that this is the bottom of the bigger range. It was also respected over here. You can see how it bounced. The price action bounced over here as well. But if you want to get really crazy with it, you would even go up here and trade this smaller range. You can see how well we had a trading range right here that was basically going in a 10% move to the upside and the downside. So you could have been trading this. Then in this area, I told you guys that I was expecting a move to the upside, and our momentum indicators told us that. So we'll be exploring that obviously later on as well. But your momentum indicators told you that we had a move to the upside, and I actually targeted $5,950 to $6,000 to short. Correct me if I'm wrong, but in this area I was expecting that, and we went to 5,900 and let's see, $5,974. So that gave us the expectance, and we didn't short it. But even if you did short the top here, you would have actually made some. You would have actually just gotten stopped out here, then gone back in. And I know some people caught very nice trades, and all the way down to here, like that's a lot of money, guys. And then you saw us still trade in this range, even though we had these crazy wicks to the upside, crazy moves to the downside. You were still playing in this range, and it was still respecting the price action. So if you got a 4 hour close above here, put in a long position, and the price action kept retesting this support, consolidating it at a nice level. Then we came to the upside. Then the idea here was, once we break 5,600, put in a long position. I didn't personally do this, but I said it in the group. So if you're a more aggressive trader, I said it in my analysis. I told you guys that this is what we're going to be doing. If we get a 4 hour close above 5,600, you put in a long position. Myself, I'm not as aggressive of a trader. I saw declining volume, so I didn't enter on this long right here. So you guys, some of you guys I know did enter, and you can see how it consolidated, broke to the upside. So you could have caught a very nice trade because we broke the horizontal. You wouldn't have caught this entire move, but you would have caught the move to about almost $7,000, and it was a very, very nice move. And you wouldn't have caught the entire move, as I said, but you would have caught a nice portion of it. Then you came to the upside and you created a range, and I want to show you guys how this created this next range. It actually created another range that was actually a lot nicer to trade. You had a $6,000 top, so you could have given yourself from 6,877 to 6,936. That was the top side of our range. So let's move this box here, and I'll show you exactly what I'm basically looking at. Let's actually get rid of everything. I want to give you guys a clear chart right here. So we broke this resistance at 5,600. That's when we said put in a long position. Then our range actually became about 5,800 all the way down here. Why that? Because this is where you got this big candle to the upside. This is where you had this resistance here. So this is good support. You could even pull it up a little bit. And you would have this range, and this would be your longing range, because you can see the confluence here. We tried to hold above it here. We tried to push above here and couldn't. We tried to push above here and did. So we did a support resistance flip, an SR flip. The resistance became support. And we retested it here a few times, as you can see. Went to the upside. So this is your, I'll make it clear for you guys, this is your long range. You would long this area with a tight stop loss underneath, or you would give your stop loss some breathing room. Now the range became 5,000 or 6,800 to about 7,000. That's about a $200 range. So you would have been stacking your orders, your buy orders down here, and stacking your sell orders up here. Okay. Now we were anticipating a bigger move, and that's why we stopped playing the range, okay? But up here, it gave you $1,000 range almost to trade in, guys. It gave you a 22% move to the upside to play on, and you would short up here. So I hope that makes sense, guys. If it doesn't make sense, let me know, but I've tried to make this a little bit longer to explain to you guys exactly how we see these levels. Now I'm going to talk about this for another 5 minutes. I'll show you guys exactly how you can get these levels as well, okay? And I do use this a lot now, but you guys can go ahead, and I've been actually looking at a lot of indicators for you guys as well, and I will be sharing a lot of them with you, such as divergence spotters and stuff like that, which I have actually shared in the group in the past as well. But for you beginners, I'm going to be showing you a lot of interesting stuff. Now if we go on the 1 hour time frame, you need to add your pivot indicator, pivot point standard, and put your basically everything the same as this. Put it on the Fibonacci, because the support resistances based on Fibonacci are very, very important. And put your basically everything like this if you want. And what do you see? You actually see that the next big pivot is 6,639. So this is an area that the bulls will have to hold. Remember, these are based on Fibonacci retracements, so they would line up with your Fibonacci's very well, meaning that the bots and algos are going to be playing these ranges a lot better. So you're going to be seeing a lot more success actually buying these areas than going on the lower time frames and doing what I just showed you guys. At the start, you will have more success buying these levels on this indicator than actually trying to find the levels yourself, okay? Because these are based on Fibonacci. They change every single week on Monday. When the new trading week opens, they will change. These levels will change, and they will just keep changing. That's all you need to know. And you need to know that they play based on fibs, which is very, very important. We'll cover fibs later on. But what can you see? It actually showed your, if we go on the really low time frames, it would be different. So 15-minute is showing a range, a scalping range, I would say, of, let's say here, all the way to the top of, let's say here, because you had these wicks here, and this is showing a very nice range. So you can short near the top, long near the bottom. Very, very nice range. You can see how it got caught here, how it got caught up here, and you put your stop loss right below. So this pivot indicator is one of the best things that I wish that I knew when I first started trading. Use this to your advantage. If we go into the 1 hour time frame, the range will be different. Okay, the range is actually showing a bigger range of 6,644 to 7,190 or 7,200. So as long as we are below 7,200, we are still bearish. That's what I would say right now with this price action. If we don't get above this on a 4 hour basis, then it's going to be bad, guys. We're going to take another leg down. The 4 hour time frame, you will actually see that obviously the hourlies are all the same. This is what I was going to say. The hourlies are all going to be the same. Your daily is going to be different. As I said, your daily resistances and supports, your weekly resistances and supports, your hourlies are all going to be different, okay? So keep that in mind. Now, the daily is showing a bigger range of $8,500 as a next resistance, and the pivot on the daily is $6,419. So this is another important thing. If we go on to the weekly is showing the next resistance at $8,161. The support is $4,000, which I was showing you guys. So that's the next areas on a weekly time frame. Now, why is the weekly showing that? I'll quickly show you. We'll explain later on, but it's showing it because if you take a Fibonacci retracement off the top 10,500, the high that we made, to the low that we made 3,500, it lines up perfectly with the 0.618 and the 0.65 Fibonacci. That's why we were targeting that $8,000 area. It's a high confluence area, a lot of moving averages coming in that area, and also the fact that these pivots are based on Fibonacci, so they will show you levels of importance with Fibonacci. Support and resistances are very important, but if they line up with your Fibonacci and your moving averages, they are very, very important. They are much more important, and that's what you want to actually see. You want to see your horizontals and your supports and resistances in general line up with your moving averages as well. So very important. Add that indicator, use it. This is going to help you at the start actually identify these ranges better and understand the price action better, and it will help you get some nice trades as well, even though you guys shouldn't be trading until you actually do learn a bit more. But what you want to see is your horizontals, as I said, and your resistances line up perfectly with your moving averages. You see these moving averages all around that $8,000 area, the 21 EMA, the 10 SMA, the 55 EMA on a weekly. Very, very important. If we go on our daily, you see your pivot actually lined up perfectly with these moving averages. You can see these 377 EMA lining up perfectly with this order block right here, or this like big amount of orders right here where we consolidated last time. And you can go back on the price action and you will get the point. I want to dive into further moving averages at a later date, but this is a 35-minute video already. I hope you understand a lot of these things, and the pivot indicator will help you a lot. So basically, you just go on your 1 hour time frame. If you're a beginner and if you've just started, go on your 1 hour time frame, go on your daily, and plot out your resistances and areas. You can even put them on your charts yourself. And for example, if you look at your pivot, you can give yourself a range from where it says the pivot is to the bottom. You can give yourself a range where you will actually be buying this area because you do see that it's a good area. You'll buy this area for scalps, for long-term trades. You can go down here, give yourself areas, and you can buy this area. You can see it's a good support, so $6,000 will likely bounce. You can go up here and say, I'm going to sell this area. So there's a lot of things that you can look at. I hope I've explained as well as I could here. I've actually just done 2 videos, so I've been doing this for the past hour now. I deleted the other one that was almost 30 to 40 minutes. So I hope I basically explained it well enough, guys. I tried to be as clear and concise as possible. I hope you guys didn't skip through any of it. This is very important, and I hope that it helps you guys. It will be a very profitable method for you guys in the long run. So thank you so much for watching. I hope you guys have an absolutely fantastic day and you're staying safe, and I will catch you guys in the group.